So amongst these listed here, we're first going to break down into supply and demand. So supply and demand is basically like the structure of markets and how liquidity is created into a market and how it's pushed into the market. So on this market that you see here, there's been an accumulation, which is a sideways trend. So it means that money is being accumulated as the market is moving sideways. So there was two wedges on the upside. You see the two wedges. So these wedges acting as support and resistance for the liquidity which is being formulated. So support and resistance is the boundaries at which the market moves. So you see the support and resistance being created by the movement of the market. So it's being accumulated, as you can see on this USD CAD. So on USD CAD, once it reached this boundary here, it broke out of this resistance, you see. So it lifted the support and started accumulating, and then it broke out of the resistance wedge that's up here. So when that happens, it means that there's something being formed. So there's a formation that is currently being formed. So when that formation starts to come into creation, we start to see like a change in character, which means that structure of the market is changing. So when the structure of the market changes, it's a lot of confluence that there's an action which will occur in the market, because now there's an imbalance at that point, you see. So Aritana on the market, this is a daily chart. So I'm gonna start it from like the biggest frame to like the smallest. Just for you to how we break it down. So from the daily, the supply and demand. So the daily supply and demand is between these levels. So this is the supply, and then this is the demand. So these two levels of the supply and demand will show us where the money is in the market. Because the major thing that we want to see is where the money is and how we get to know where the money is in the market. Because if we don't know like where the money is in the market, how are we gonna know where the market they are, guy? Because the market only goes to where the money is. Yeah, where there's no money, the market does not go. So the supply and demand of the daily chart, they are here. So as you can see, the demand was basically retailing. So the retailers are basically like the people who funded the market. So you don't want to trade a trend. Like people say, trade the trend or what, and you're not supposed to trade the trend because the trend is what creates the liquidity in the market or what. The trend is what creates the liquidity. So we are trading basically the the crash and the breakthrough, the breakouts, because that's where the money is and that's where the market goes to. This is just creating the money within the market. So when they're creating it, it's obeying between these wedges. So it means it's a trend. If I line like a trend, it's fine linear. It's a straight line trend, you see. So after a breakthrough, I mean it changes the character of the trend. So I a trend, It's no longer a trend because it's breaking through this support, this resistance here, and it's breaking away from the support as there's more liquidity being created by the support. So e bontsha gore tsaka e o tlase wa bona because market no yana e breakela go ya go godimo. So ha e breakela go godimo, we are looking for basically confluence wa bona. Re batlana le confluence, and the confluence here we're gonna get it from the formation as well. So the formation it's a bias. So and then I'm gonna send you the paper. It's a formation, like different formations. But we're just gonna go through like the two biggest formations, the usual formations the di bona gabaya. Yeah, so there's basically like two formations for one. So like that one in Elida, that's the trend. You're on the trend there, and then this is the market. Yeah, accumulate so it's you move sideways, if you move sideways, and then there's a point where it comes, yeah, market break through trend in. So when we see this coming through, it's changing character of this upward trend. So this upward trend means it's being broken by this wedge. When this wedge gets broken, it means that there's a formation which is coming. So when the formation comes, the corner go dim and then come down, and then it comes back. Come up, come down. So when it comes down to this point, how the market reacts is that once it starts creating a formation, it is going to trap some more traders in some points because on this point. So sell fana. When the market comes down, so it's going to trap the retail traders, which is where usually people will want to sell a market instead of selling at this point. And then it's going to push back. Or when I push up back, the smart traders are going to close their trades at this point. More pointing in about already trading because by its original formation it's because market the in the out of the blue, it doesn't just turn. So as it comes up, it's creating a formation. It can come down, and then this is what we call a double top. This is what we call a double top formation, where it's two heads, where it comes back and triggers all the limits, the orders that were set amongst this reaction area here. So once these orders are reacted, the market would have been satisfied enough to move away and then go with the movement, and then it will come and collect all of the liquidity which was created on this side. Hence, it collecting all the liquidity. This is how the institutions move the markets. So hence, we are not trying to be on the retailer side. We are trying to be on the institution side when they come and collect all of the liquidity brought in by the retailers, you see. So besides that formation, there's, as they get trapped here, there's a head and shoulders formation, which is the highest top from this shoulder. Once market the order operator from this order here, inflating again, because it's still in the inflation zone, and then it comes back, comes down passing the shoulder, and then creating a second shoulder, coming to activate some more orders here. And then the market breaks out into the movement, collecting all the liquidity, which was within that wedge, or when Kozaga is from here. This is where the liquidity is. So once this breaks from here, the character's already changed of this market. Is no longer moving sideways in a trend. Now there's a formation and then a reaction and a collection of all the liquidity, you see, and then the market is going to come around here and then accumulate again, and then same thing's going to happen with the formation as well. Are you joining with another phone? Libs. You back? You back? You back? Are you back? Can you hear me? Can you hear me? Can you hear me? Can you hear me, bro? Can you hear me, dog? Can you hear me? Oh. Bro.
Broski. Good now.
Bro.
Yes, I had a problem with the connection, but I'm back on now.
Oh.
Can you hear me now?
Yeah, I can hear you now. Can you hear me?
Yeah, I can. I'm just looking at the chart here, the graph and all that.
All right. Shit, yo, when did it cut? I don't know where I was when it cut.
But then I understood now. You were talking about the reasons. Seems like you were drawing something here.
Oh, okay. So yeah, I was saying that let me just take it back a bit. So yeah, so I was saying at this point, the hidden shoulder. The hidden shoulder
Yeah, the
formation.
hidden story. Yeah.
Yeah, so it creates the first shoulder, you see. So the
Mm-hmm.
first the first movement after like an impulse movement is not the showcase trade. You see, it's not the showcase trade because the market has to create a formation first before we can have that
Yeah.
institutional move, you see. So immediately once you start to see that accumulation, you see, is when the money is being created. You see that? So then you're gonna need an
Mm,
impulse movement which it breaks either the support or the demand. And once it does that, it means that it's about to change character. You see, the character of the market is about to change. It's no longer going to be a trend anymore. It's going to be now, it's changing its character, you see. So there's basically just two characters in the market, which is accumulation and collection, you see.
yeah.
So, uh, once that movement is done, the first shoulder is created. And then, so basically, the previous one I talked about, the double head, double top.
Yeah.
So
Yeah,
basically,
I can see it.
yeah. So you have the reaction, it'll break through. If it's not a double top, it will break out, you see, and then it will have another reaction point, and then it will turn back, uh, collect what is here to come back to the neckline of the head and shoulder, come back up to
Mm-hmm.
collect that order of that first shoulder because the second shoulder collects orders from the first shoulder. You see, so this
Mm,
is this is where your order line is from here. So this is where your order block will be for your trade. You see, so in this formation, the best trade to take is on this shoulder here. You see, the best trade is here. After all of the formation, you start seeing everything clear. The head and shoulder is being created. Then you can take it down on this second shoulder and then it will come down. The market will come down. So the smartest trade is the second shoulder of this formation. You see, because if you take it on this first one, the first movement is always a short movement and it will always come back to that order. So it's not really like you got to be experienced in order to trade this movement here, you see, especially if you trade in a whole formation, and because it will come back to this level as like essentially, and then it's going to be a waste of a trade basically. You see, it's going to be a waste of a trade if you do trade this entry here, unless you're coming in with like a big lot size, you see, but then you're gonna have to risk a lot, a lot of cash in order to execute a nice profit off this run, you see. So then let it catch the first shoulder or the first head, react, and then it will come either meet up or break through, create the head, come back to collect orders from the first shoulder, and then it will break down, and then you will have a collection of the liquidity being created here. You see, so it's basically that setup. It's basically that setup here that we are witnessing on this daily chart here. So this is, there's even a heavy reaction now.
Yeah, I can see.
Yeah. So it's an ongoing trade even now. Some entries I have here. So the supply and demand, we see the supply and demand. So we can see the demand has satisfied the supply. You see that? So that's the first thing we need to know, if like the demand has satisfied the supply, or if the supply has satisfied the demand. And then from there is the formation. So now the formation is being created. You see that? The formation is being created. The character has already been changed. You see that here? So the character has already been changed. So this is the formation that is coming through now. Just bring out this path. So after it broke, is a reaction. So the market is going to come back here. Then it's looking to come back again. You see that? It's looking to come back again. From here, collect. And then at this point, we will know what will happen. If it does break through, the market will come back. The market will come back. And this is the trade we're going to take again. You see that? On the daily. And then it's going to collect all of this liquidity here that is on this trend line. So besides that accumulation, sorry about that. Besides from this formation occurring, it's just going to be a double top. See a bit, and then all of that. So still, this trade is going to be our trade here after it comes back from this order. So right now, this will be a daily formation. You see that? You still there?
Yeah, I'm still here.
So yeah, this will be like a daily formation on the daily chart of this USD CAD. On that, we just have 2 minutes now, so I'm gonna end this. Just join that link again. Now.
That link again.
Yeah. Go on that link again.
I bet. Okay.